Hello, I'm Bryce Knorr, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Thursday, June 13th, 2013. Market analyst Paul Bergner joins me to discuss a USDA report that provided little help for grain prices. The most friendly data out yesterday likely was old crop soybeans. The government left its forecast of old crop ending stocks unchanged, again appearing resistant to any carryout estimate below 125 million bushels. But usage data was juggled. Crush went up 25 million bushels thanks in part to strong meal exports, but soybean exports fell 20 million bushels, reflecting the slow pace of sales and shipments lately. Imports were also boosted. But USDA made no changes to its 2013 crop forecast, keeping acreage and yields unchanged. At 265 million bushels, supplies would be more than adequate, dropping the average cash price to $10.75, though that was up a quarter for May. Old crop soybean futures had a volatile session, making a new 9-month high before closing up only a tick. New crop futures fared worse, though November did hold its break above channel resistance, finishing well off its lows. Paul, if USDA is right, new crop prices seem overvalued by $2 or more a bushel. What are the odds the government is wrong?
Well, Bryce, I think those odds are good that they are wrong on that number. But the really big question is, are they $2 wrong? There's still a lot of acres that are up in the air. We're only 71% planted last Monday. And then, of course, Wednesday's numbers kind of gave us a hint that we're going to stick with that. But we still have to look and see whether or not there's some corn acres coming or whether or not we can get all of those soybeans planted. I think those are the big things that are there. I do think those tight supplies and some export rationing out there is still the wild card out there, still holding up old crop prices, and gives us a little bit of support. Even with the hit that we took on Wednesday, we're still above $13 on those new crop beans, in a place that we're not too disappointed in being.
The June crop report didn't have anything friendly for corn. Wednesday's separate production estimate for ethanol showed stocks falling to the lowest level since the government began tracking weekly data 3 years ago. That helped USDA raise its forecast of corn usage for ethanol for both the 2012 and 2013 crop years. Still, weaker exports and increased imports for old crop offset the biofuel boost, raising August 31st ending stocks by 10 million bushels. The news didn't get much better for new crop either. USDA cut its statistical yield by 1.5 bushels per acre to 156.5, but made no change to acreage. That kept production above 14 billion bushels, down only 135 million from May. Total carryout dropped only 50 million to a very burdensome 1.949 billion bushels. Now, I think there's a good chance the agency's June 28th acreage report will show fewer acres, and demand is likely better for 2013 crop corn than USDA is forecasting. But even with those improvements, carryout would more than double in the year ahead. Weather could still rally the market, but December futures closed the Memorial Day gap after the report and look like they could be headed for a test of May lows. Paul, you've done some work with acreage adjustments. What does your analysis show, and what does it mean for corn prices?
Well, my work has shown that we're looking like something in the 1.75 million acres of lost corn acreage to the late planting and the rains. The question really is, how predictable are those numbers? As we look back at the history back to 1980, the years that seem to be slow planting don't always end up being the years that see the biggest losses in acres. One of the things that we start to see is that corn's still profitable. There's moisture in that ground. If I hit a dry spot, do I go ahead and put that corn in a little bit late? We'll see where that number turns out. But farmers tend to plant corn even when we think that they won't. What I'm afraid of, though, is that 1.75 million acres lost is not enough to push us up to $6 corn. I think that we'll need some additional drop in terms of yield before we can see that price really get to scoot back up there. At the current yield, a 1.75 million acre loss only drops us to 13.6 billion bushels, still a big crop. So I think that's something that we have to look at as we head on into the summer.
We got a little positive news today, but only a little. USDA raised its forecast of June 1st stocks by 15 million bushels due to weaker exports. And it also boosted its estimate of 2013 winter wheat production by 23 million bushels. Increased export potential in 2013 would offset the increase in supply, but not by much. Overall carryout will fall just 11 million bushels from USDA's May estimates. USDA did cut its forecast of global carryout by almost 200 million bushels compared to its May numbers, but world stocks would still be higher for the crop year. Futures sold off as a result. Chicago July slipped to 3-week lows, and Kansas City honed in on its April lows. USDA made no changes to its spring wheat numbers. That will happen in July. But both old and new crop spring wheat futures slipped below chart support. Paul, the wheat market looks like it's done. Is it time to stick a fork in it?
Yes, as bad as I hate to say it, I do think that maybe this wheat market has seen its high points. There's been a lot of positive news if you're a wheat grower, maybe not a wheat seller, but a wheat grower. We've seen some positive yields come out of the South, maybe a little better than we expected in some places. So I think that piece is out there, weighing a little bit on these markets. Not much disease in the Midwest. That's another piece that with all the moisture, we've started to watch for that. Haven't seen much of it. So I think that's something else that is there. So as we look at this market, really it's been great harvest weather in the plains. Maybe not so good planting weather in the Midwest, but great harvest weather in the plains to get started. And I think we're seeing some progress there, seeing some good news there. We'll see what happens as we come on further. The numbers are up. USDA put up 2% increase on that winter wheat crop across the board in yesterday's report, and so I think that's something else that is going to weigh on us a little bit. I'd sure like to hold on to $7 winter wheat and $8 spring wheat, but I do think we have some challenges there. And if this crop continues to come in maybe a little better than we expected, we could really be challenged to find some support for prices in this wheat market.
Well, thanks, Paul. And thanks to the farmers who are going to farmfutures.com and filling out our acreage survey. We'll have those reports before the USDA numbers come out at the end of the month to help guide your marketing plans.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of cash